Ladies and gentlemen, every 10 days or so, I post in my YouTube community post section, ask me a question about the market that you would like to see answered in an upcoming video. And you guys always leave some very insightful questions, and I try my best to give insightful answers. So I've got questions today about where I think USDT dominance will go this cycle, questions about candlestick formations, what they mean, why it matters for timeframes to close in certain places, my opinion on Bitcoin and altcoins and whether or not they'll go to all-time highs even if interest rates remain at current levels, my personal thoughts about staking cryptocurrencies, the pros and the cons, whether I think Bitcoin will reach $1 million in my lifetime, whether or not I'll be rotating my bags from Ethereum into altcoins as Ethereum reaches all-time highs. So what I'm doing in relation to altcoins and Ethereum. And we've also got a question about the cycle's narratives. Will we see an AI narrative? Will we see a meme coin narrative? Will we see any narrative at all? So quite a few insightful questions here today. And as I said, I'll try to give some insightful answers. Before we get into it, please go ahead and check out the Bitunix Exchange. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global, it's non-KYC, it's never been hacked before, it's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers. So question number one is about USDT dominance and where I think it will bottom out this cycle. I'm going to take the question in a slightly different direction, which I think is going to be more useful to you, because I don't think it matters where USDT dominance goes. I don't think it matters where USDT bottoms out, but I do think the USDT dominance chart is an incredibly important chart that you need to understand, and you probably need to understand how it moves in general. So I'll give some insight into that. This is a chart that is reverse correlated to Bitcoin. It measures the strength of USDT, which is the Tether stablecoin, against the rest of the market in a percentage format. So currently it's at 4.5%, which means that 4.5% of every single dollar in cryptocurrency is sitting in Tether right now. Obviously, Tether is used to buy and sell crypto. So when this chart goes downwards, that basically means the market is going upwards because people are using their Tether to buy crypto. When this chart goes upwards, that basically means that the market is going downwards, okay? Now, obviously, it's not a linear one-on-one correlation because obviously, generally speaking, this chart is trending upwards over time. And if that was the case, if it was as simple as a one-to-one correlation, that would mean the entire market would be trending downwards over time. But of course, we know the opposite is happening. So there is a general uptrend in this chart, which is due to the fact that the market is getting bigger. There are more people in the market. There are more coins. The market is getting more diluted with different altcoins. And therefore, the market share of Tether is going to be decreasing over time naturally. But the correlation still does remain. And this correlation actually has been incredibly relevant. And it remains relevant right now as we speak today. Because this red support line, or previously red support line right here, this red support band, is actually what marked the top on Bitcoin and altcoins in 2021 on both occasions. So our 2021 all-time highs from February 2021 and also November 2021 were marked by the support retest of this red band on the USDT dominance chart. We also found very strong resistance for many months on end on Bitcoin across the market from that red resistance band right here, with constant bounces from that level, rejections, fake outs, and we've finally cleared that level and we're coming upwards again and we're actually retesting it for resistance, which means the market has support here. So that's one of the reasons why the USDT chart is so relevant. It's because any support or resistance that forms on this chart actually represents support and resistance that you might not be able to see immediately on Bitcoin and the altcoin charts. And so right now we have resistance on the USDT dominance chart, which means we have support on the Bitcoin chart. Now, as to where this could go this cycle, as to where this chart could bottom out this cycle, because we've already established it moves downwards when the market moves upwards and vice versa, that's very difficult to predict because, as we've already established, there is a gradual incline inherently built into this chart due to the way the market works. So we don't actually know. It could be this yellow line. We come down, test support of the yellow line. We're unable to break it. And we go upwards. It could be lower than that. Perhaps we go down to the 2021 lows again. But overall, it's literally impossible to tell. what actually matters about this chart more so than where it actually is on a specific percentage level is what it is doing in relation to resistance and support, specifically this yellow support line here and this red resistance line here, because that yellow support line represents market resistance and the red resistance line represents market support. So that's incredibly important to understand, and you need to be watching this chart as kind of supporting evidence at all times for that reason. Here's a very interesting question that many people don't think about enough. I hear YouTubers all the time talking about the importance of weekly candle or daily candle closing prices and the structure of specific candlesticks. I understand this might have a psychological effect when a market like the S&P 500 closes for a day, but why is it important for Bitcoin, which is traded 24/7? Very good question. So S&P 500, traditional markets in general, any stock you might look at, opens at the start of a trading day and closes at the end of a trading day. And obviously for that reason, it just inherently makes sense that the candlestick structures would be important because they represent a trading day. However, cryptocurrency is a 24/7 market. And so it's not immediately obvious as to why candles would matter. Well, one of the reasons, which you already touched on, is simply they matter because they matter to people. That's for psychological effect. Candlesticks matter to people, and therefore they should matter to us because people inherently are reacting to candlesticks. They are familiar with how the stock market and S&P 500 and traditional markets work, and because everyone who's buying, fundamentally, most people who have any real influence on market price are using TA, that means you should use TA as well. TA doesn't inherently make sense. TA is almost primarily psychological. There's nothing about a triangle structure that makes sense. It's pretty much all psychological. But it still works, and that's the point. We use it because it works. But I can give you an actual concrete reason. I understand it's not a satisfying answer, even though it's entirely true. A concrete reason why candlesticks still matter and specific time frame closing at a specific time and a specific price matters is because they relate to indicators as well. So if we take the 2-week chart on Bitcoin, the 2-week chart needs to close above a certain level, let's just say 115,000, so that the 2-week chart triangle formation we have on the RSI can shift momentum to the upside. That's an example of why timeframes matter even in a 24/7 market, because it's not just about the timeframes, it's not just about the place in which candles close, it's about the indicators that the closes have effect on, given the fact that all indicators are essentially just basically moving averages at the end of the day. And even though it's a 24/7 market, these candlestick structures do actually still matter even inherently. Just to double back on what I said before, it's like, yeah, okay, it's slightly arbitrary, slightly psychological, and we're reacting because we should be reacting, not because it actually makes sense. But also, it does kind of make sense. If we have a 2-week candle, there's no difference between that and a candle that opens at a certain hour and closes at a certain hour on Wall Street. Fundamentally, the candlestick structure itself still represents what happened within a time frame. So if anything, maybe the time frame itself is arbitrary and we're just used to it being a traditional market time frame. Like this 2-week candle structure that I've circled here in red still represents massive buying pressure that happened to the upside, which was quickly eaten down by bearish selling. And we ended up closing basically where we started. That's a bearish candle. Yeah, we moved upwards, but that's irrelevant. The fact of the matter is the candlestick structure still represents and tells a story about what happened within that time frame, regardless of the fact that it was a 24/7 market. In your opinion, can Bitcoin and altcoins go to all-time highs even if US interest rates remain at current levels without any further cuts this year? Absolutely. There is a misconception, a pretty popular misconception that's been circulating the market for a long period of time, that interest rates are the be-all, end-all. It's not true. It's simply not true. There is a correlation, of course, and they do matter. Now more than ever, by the way. But with that said, we look at 2017, and it's not a great example. Okay, crypto was in its infancy in 2017. We understand that, but it is an example I'm going to use because it was part of the broader 4-year cycle. In 2017, Bitcoin went upwards close to 150x, okay, in a very linear bull market with very few corrections, and altcoins saw their first ever actual altcoin season. That entire thing happened when interest rates were not just stagnant, but actively rising, and actively rising with no end in sight, okay? So we can see bullishness during a interest rate rising environment, let alone stagnant. And in fact, even this year so far and last year, we've seen that. You ask the question, do you think Bitcoin can go to all-time highs with interest rates so high? They're already at all-time highs. I mean, Bitcoin has never been this high before. Bitcoin, is cutting above 125,000. If you told people who believe that interest rates are the be-all, end-all, that Bitcoin will reach 100K without that many rate cuts, they wouldn't believe you. The fact of the matter is, rate cuts being delayed over and over again over the last year have actually, maybe they've had an effect, we don't know, but the overall trend is Bitcoin's still rising, and so is Ethereum. Altcoins aren't, but that's a slightly separate story. It's probably because Bitcoin's had a very interesting bull market in the sense that it's been filled with long, drawn-out consolidations, which don't kind of end well for altcoins, because altcoins rely on greed and hype. But to answer your question, yeah, of course, Bitcoin and crypto can go upwards with rates this high because they've been doing that the entire time. And I want to further kind of say that interest rates themselves don't matter as much as the perception of interest rates dropping and rising do. People perceive that interest rates will be dropping. In fact, the next Federal Reserve meeting, we have about an 80% chance of a 25 basis point cut. That's very good. And that perception of the cuts that are to come is more effective than the cuts actually coming. Right? Markets are trying to predict the future. People, if you were told that there was going to be a nuclear apocalypse next week, you wouldn't wait till next week to sell. You'd sell now, okay? They're future forward looking. And so with rate cuts coming, that's probably going to be a good thing. But it's not the be all end all. And therefore it doesn't mean that the market will keep going upwards until rates stop cutting. That's not how it works. What are your views on staking cryptocurrency? Personally, I don't really think it's that good. And I'll tell you why. First and foremost, it means a lot of the time you have to have your coins on exchanges for very, very long periods of time, which I don't think personally is a trustworthy situation. I do ascribe to the saying, not your keys, not your crypto. So if the staking you're talking about does involve having your coins on centralized exchanges for long periods of time, I'll just say this. There's a reason they're offering you very high returns. It's because they know that there is a risk involved there, and do not ignore that risk. It is very real. Exchanges do get hacked, especially if you're talking about doing this for years on end. It's also worth noting that you're going to get paid most of the time in the coin that you are staking. If you're staking BTC, you're going to get paid in BTC. And if you're staking BTC going into a BTC bear market, you might find that the USD value of what you're gaining from that is actually much smaller than what you could get even in a basic savings account in your country. So you have to be aware of the macro environment. I would not be staking going into a crypto bear market, because crypto bear markets not only mean that your USDT value is going downwards, your USD get value of the coins you're staking is going downwards. It also means the rewards you're gaining from staking them is going downwards as well. And you're exposing yourself to the risk of exchange collapse, more so in a bear market as well, because obviously exchanges start collapsing during bear markets when they realize they don't have as much money as they thought they had. So be very careful with staking. It does have its place, but I'm not convinced that it's really as lucrative as some people think it is. It's definitely something that needs to be dependent on the macro environment. It's not something that you can just be like, oh, I'm just going to put money into the stake every week on Friday. You need to know TA to do that as well. In fact, everything to do with cryptocurrency, I think you need to know TA with. It's a very volatile market, and there's lots of caveats to things that might seem simple, like staking. Do you think Bitcoin will ever go to $1 million in your lifetime? Absolutely, I do. But the big nuance there, and this is a quick question to answer, is will it get to $1 million with USD retaining the value it has now, or will it get to $1 million and USD hasn't been inflated into oblivion? Because that really matters. And I think by the time it gets there, there is a decent chance that you wouldn't be measuring it in US dollars anymore, potentially. That's a very big claim, but there's a chance that's true. We might not care about the US dollar value by the time it gets there. We might only care about the Satoshi value. After Ethereum hits new all-time highs, will you be rotating into altcoins? Okay, I will think about it, and I'll tell you why I'm not certain, and I'll tell you why I'm not going to say anything definitively right now. We need to see evidence first and foremost that altcoins actually will start outperforming Ethereum. Right now, we are in an Ethereum season, and we can very clearly illustrate that by simply looking at the gains Ethereum has had since April. It's been 180% gains, while the total 3 cryptocurrency market cap, which is the altcoin market since April, has only seen gains of around 60%. Bitcoin, again, around 60%. So Bitcoin and the altcoin market are doing the same thing. They're both upwards 60%, while Ethereum is up 180%, making Ethereum the much more favorable investment in the last 3 or 4 months. And even on local timeframes, there's really no evidence of that changing. Bitcoin dominance is down a little bit, but that's probably driven mostly by Ethereum. It's down 8%, while Ethereum BTC, which is Ethereum versus Bitcoin, is upwards around 85%. So it is an Ethereum-dominated market, well and truly. And at this point, there's really no reason on a generalized scale to be holding anything other than Ethereum, because Ethereum is outperforming Bitcoin dramatically. It's showing dramatically more gains than the altcoin market as well on a generalized scale. Of course, there's going to be a few altcoins here and there that are outperforming Ethereum, but on a generalized scale, altcoins are doing much worse. And we do know that inherently so far this cycle has just been pretty bad for altcoins as a whole. So there's not really much optimism in the air for altcoins right now. The one string of optimism for altcoins comes from the fact that, it kind of sounds counterintuitive, but it comes from the fact that Ethereum is outperforming Bitcoin. Because obviously Ethereum outperforming Bitcoin is a sign that we're moved away from a Bitcoin dominant market environment for the first time this cycle, and moving away from a Bitcoin dominant market environment even further than that would be moving towards an altcoin dominant market environment. It's kind of how the food chain of cryptocurrency money flow works. It goes from Bitcoin, the money then flows down into Ethereum, and from there, we're at that stage right now, it could actually flow downwards even further into altcoins before everything crashes out and it flows into stable coins, and that's when we see a bear market. So there is a glimmer of hope for the altcoin market in the fact that Ethereum is pumping right now. And I assume that if Bitcoin keeps going upwards, we will eventually see an altcoin season of some sort. But I wouldn't be flipping my Ethereum into altcoins simply because Ethereum crosses a certain level. I would only be doing it once I see very clearly that altcoins have actually started outperforming Ethereum on a generalized scale. That, in my view, would represent an actual altcoin season. So if I did flip my Ethereum into altcoins, it would have nothing to do with the fact that Ethereum had crossed a certain, arbitrary price level. It would have to do with the fact simply that Ethereum had started underperforming against altcoins, and altcoins had become a more favorable investment. And that will be very easy to tell because you'll see altcoins blowing up everywhere and you'll see Ethereum pretty much being stagnant, just like Bitcoin, or rising gradually. So I'll finish it off with this quick question here about narratives in the altcoin market. Do I see any certain narratives outperforming other ones this cycle? Or do I think it's going to be strictly a Bitcoin and Ethereum cycle? Again, we've seen no evidence so far whatsoever of an altcoin season. And what we do know about altcoin seasons is they've only ever occurred within regular 4-year cycles. Now, the 4-year cycle is looking to end in about 3.5 months. Actually, less than that, 3 months, just under 3 months. So we don't have much time left. Now, we don't need much time. Altcoins can move very quickly, and they can extend beyond Bitcoin's top as well by about a month. So we don't need much time to see dramatic moves. But in terms of like an overarching, encompassing altcoin market narrative like we've seen historically, sometimes they can take quite a while to form. I think the safe kind of assumption is if we see an altcoin season, of course, meme coins will pump. They always do. In fact, they're generally the first movers. In my head, it makes sense for AI to be a very popular narrative. But the problem with narratives in general is that, yeah, okay, it's all well and good to have a narrative that outperforms another narrative. But, if you're going to have an AI altcoin season predominantly, the AI market is already extremely oversaturated, and so are most of these little ecosystems we're seeing formed here. So it's going to be isolated to a few of the top coins with a few outliers. Just because we see an AI-dominated altcoin season, hypothetically, doesn't mean all AI coins pump. So, it's a little bit more complicated than that. And ultimately, if I'm going to sit here and say, oh, I think this narrative's going to do well, that's just based on a guess. There's no data there. In my head, it's like, okay, AI will probably do well. The AI revolution is coming. Superintelligence. Some people assume superintelligence could be here by 2027. There's an interesting roadmap called AI 2027, which you can look into there. But again, it's just a guess, so I'm not sure. The only way to find out is to actually wait and see the first signs of it and jump on the train before it's too late. You just have to be reactive. Guys, thank you so much for watching. I really hope you enjoyed. If you did, I have something for you. It's the Bitunix Exchange. I'd appreciate if you check it out. A lot of people ask me what exchange I use as a trader. I use the Bitunix Exchange, and I don't have a contract with them. I haven't signed anything with them. I don't work for them. I advertise them on my own accord. With my referral link down below, you can get a 15% trading fee discount permanently attached to your account, as well as up to 8,000 USDT in rewards just by signing up with my link down below. Why would you sign up? Well, it's global. It's non-KYC. It's never been hacked before. It's got all the functions and pairs that you would expect for a major exchange. For that reason, I use it. And I implore you to consider using it as well. Sign up with my link to help out the channel, help out yourself. Cheers.